Hi again folks, welcome back to Meaningful Money. Now we're still talking about foundations, getting the foundations right in your financial planning so that if the very worst happens, then your financial plan at least will carry on without you, and those that you love will be looked after, your debts will be paid off, things like that. So we've talked about life assurance. Now we're talking about something called critical illness insurance, another very important part of your financial planning foundations. What is it? Right. Critical illness is first of all, it's almost always a term assurance. So do you remember that means that there is both a start and an end point to the policy. So let's say you set it for 25 years to match a mortgage. If you are diagnosed with a critical illness, come back to that in a minute, in that term, then it'll pay out. If you don't, or if you are not diagnosed within that term, then the policy will not pay out. So it's a term assurance benefit. Usually critical illness is a lump sum benefit, so it pays out a lump sum. I have a critical illness policy. It's for the same amount of money as my mortgage, so that if I get something nasty while my mortgage is still outstanding, it'll be paid off. Okay. So what is a critical illness? Now, a critical illness, as the name suggests, is a very serious illness. Now, what are we talking about though? We're talking about, for instance, cancer, heart attack, stroke, multiple sclerosis, motor neuron disease, non-Hodgkin's lymphoma. How about loss of limb? Complete loss of eyesight can sometimes be covered. Or maybe even something called TPD, total permanent disability. Now, what I've just given you there are quite broad categories. I just said cancer, for example. Well, there's tons of shades of grey within that. There's more serious forms and less serious forms, easily operable cancers and ones that cannot be operated on. So there are, as you can imagine, very tight definitions as to what is a critical illness and what isn't. And one thing to be careful of when you're arranging critical illness is that those definitions can sometimes change, or differ rather, between providers. Now there are ABI standards, that's the Association of British Insurers. There are standard definitions, and most companies, life insurance companies who offer critical illness policies will adhere to those definitions. But it may be that they cover some but not all. So whenever you're arranging critical illness, if you do it yourself, or make sure your financial advisor is looking at the different kinds of illnesses covered by each policy and gets you the best possible cover within the premium you can afford. Now, do you remember when we were talking about life assurance, we talked about the premiums of the many paying for the claims of the few? Well, if you think in order of likelihood of claim, you have life assurance at the outside edge of the range. You're not likely, for instance, if I have a 20-year policy, I'm 35 years old now, the chances of me dying before I'm 55 are pretty slim, all right? So it's not likely that I'm going to make a claim. But critical illness, which basically means I'm going to get poorly, but the chances are I will survive, well, that's more likely than for me to die. The increased likelihood of claim means it's more expensive to cover a critical illness than it is to cover just death. Now, you might also remember we said that for life assurance it's cheaper for women than men because they live longer. Well, the reverse is usually true with critical illness cover, because women are more complex beings. They generally have slightly more expensive premiums for critical illness than they do men do. So it's important that we get the definitions straight. It's important that you get the best kind of cover for your an acceptable premium. What about a bit of a case study? Now, not a specific one obviously, but one thing I have done for clients in the past, because it's quite expensive, is where they have been unable to afford to cover the full extent of their mortgage, for example. What I have done is worked out what 5 years worth of mortgage payments might be and set the critical illness benefit at that. Well, that might be £10,000, say, as opposed to a £200,000 mortgage. Well, that makes it slightly more palatable. I can't stress enough, though, just how important critical illness is, particularly if you have a big loan, because there's probably nothing more likely to wipe out your ability to earn an income and service that loan than a critical illness. If you get diagnosed with cancer tomorrow, what you don't want to have to do is worry about your mortgage, to have to worry about getting back to work as quick as you can so you can pay it off. No, far better to have it paid off, or at least to give yourself a few years breathing space. If you can do that, then that's good financial planning. So that's critical illness insurance. One last thing to say about it. Usually the definition of a critical illness, which means the policy will pay out, is that if you're diagnosed with something nasty and you survive for a set period, and that period is usually 14 days, can sometimes be 30. So if you have a critical illness policy and you are diagnosed with a critical illness as per the definitions within the term, and you survive for 14 or 30 days, then the policy will pay out. Critical illness is really important, folks, so don't discount it. It is expensive, but there are ways that you can work around the expense and perhaps choose a lower level of cover. But it's really important, so don't dismiss it. Leave any questions or comments and I'll get back to you as soon as I can. I'm not talking to myself, I got a camera on here, just so you know. Meaningfulmoney.co.uk